So, Mark, one of your common themes is this whole concept of the business not being an income stream, but actually being an investment tool or an investment vehicle. Is that the right approach to take? If someone's just starting a business from day one or year one, is that exactly the right mentality, or does someone have to have a different mentality and views an income stream in the short term?
So we like to tell our business owners to treat their business as an investment rather than a paycheck. And what I mean by that, Edward, is that most business owners look at the amount of money that's in their checking account and they see that's available to them, and then they take it without any real regard as to what's coming down the pipe in terms of what's committed for funding for things they have to pay and so on and so forth. So for a business owner, I think it's important for them to think of their business as something that's got value. And in most cases, all business owners have a business asset that is probably 80, 90, or might even be 100% of their retirement asset. They think one day they're going to say, I'm going to sell my business, I'll cash it in, get a bunch of money, and I'll never have to work again. Well, that may be the case, but in most cases it's not, because there's a value to that. And in a lot of cases, the business owner thinks the value is up here when the reality is it's probably here. And so it's our job to try to help them bridge the gap and get them to a point where that value comes up closer to the number that they need for retirement. And so there are a number of things that we help our clients understand. And the biggest thing is, what are the elements of the business that drive the value of the business? And what I mean by that is, a business might trade on a factor of EBITDA or profit, and they may get a multiple of that. So their business worth could be X or five times whatever the profit is. And so in that particular case, a business owner would want to focus on making that business very profitable, especially in that window of time when they want to start to think about selling it. In other instances, though, business might trade on the value of just top line revenue that it brings in. A good example would be like an insurance agency. An insurance agency has value based on the book of business and how much they're getting in terms of premiums. And so for an insurance agency owner to think about value of the business, if it's top line revenue that's driving that, then in order for them to increase the value of the business, they would want to get more business so they can acquire more business by buying a book from somebody, or just being very aggressive on getting top line revenue without really regard to the profit side. It's important for a business owner to have the mentality of thinking of their business as an investment, because there's so much of what goes into the value of the business that's important on the back end when they want to exit the business.